They told you the stock market was created to help companies grow. But what if I told you that's a beautiful lie? The real story is darker. It begins with war, power, and a clever way to control people's wealth without them noticing. You think you're investing in your future AE, but what if you're just a pawn in someone else's game? Why does Wall Street exist? Why did someone decide to invent a system where you trade tiny pieces of paper and call it value? Was it really just about business? Or was it something far more calculated? A tool disguised as opportunity, hiding a trap built for the masses? To answer that, we have to go back in time, way before skyscrapers and stock tickers. Back to a place where empires were rising and kings were running out of gold, where merchants weren't just traders, they were gamblers, risking lives and oceans. Fortunes were made, nations were destroyed. This isn't just a history lesson, it's a wake-up call. Because the stock market wasn't created for you to win. It was created so someone else always would. And once you see how it started, you'll never look at a stock chart the same way again. Act 1. Seeds of speculation. It started with ships. Not the kind in your bathtub, but wooden beasts crossing oceans, carrying spice, silk, and survival. In the 1600s, the Dutch were building an empire, and they had a problem. Expeditions were expensive and risky. One bad storm, one pirate raid, one spoiled shipment, and a fortune was gone. So they asked a simple question: what if we didn't take on the risk alone? What if we could sell little pieces of the risk to everyone else? That's how the Dutch East India Company became the first corporation to issue shares. People bought in, hoping the voyage would pay off. If it did, they got a cut. If not, they lost their money. This was the beginning of the modern stock market. But make no mistake, it wasn't about democratizing wealth. It was about transferring risk from the elite to the everyday man. Merchants got rich. Investors got nervous. Soon, an entire exchange was born in Amsterdam, the first of its kind. People shouted prices, deals were made in taverns, rumors moved markets faster than facts. There were no financial reports, no balance sheets, just belief and speculation. It wasn't about business anymore, it was gambling dressed in velvet. The lines between risk and reward blurred. The lines between truth and speculation disappeared. People started betting on companies they didn't understand, just like today. The first bubble, the tulip mania, was right around the corner, and still they kept buying, selling, hoping. It was no longer about spice or ships. It was about paper, about promises, about power. And from this chaotic dance of greed and uncertainty, the stock market as we know it was born. Act 2. The rise of greed and power. The stock market didn't grow because it was fair. It grew because it served the powerful. Empires saw it not as a tool for wealth creation, but as a weapon. The British used it to finance colonial conquests. Shares in the East India Company weren't just investments, they were stakes in domination. When you bought in, you weren't funding tea or spices. You were funding armies, ships, occupation. The line between corporation and government blurred until it disappeared. Company decisions became foreign policy, the boardroom became a war room, and the market became a mirror of empire. Meanwhile, the rich learned a new trick: how to use speculation to their advantage. They could manipulate prices, spread rumors, crash stocks, and buy low, then repeat. The public, they followed blindly, chasing fortunes that evaporated in the blink of an eye. Financial instruments became more complex: bonds, derivatives, futures, options, swaps. The system wasn't built for understanding, it was built for confusion. Because when people don't understand the rules, they can't win the game. The stock market became a game of musical chairs where the elite always had a seat. And if you lost, well, you shouldn't have been playing. Crashes came and went. Fortunes were made overnight. And still, ordinary people poured in, believing they were part of something big. But the truth? They were just liquidity, fuel for the engine. Every time someone lost their savings, someone else made a profit. The market rewarded risk, not honesty, power, not fairness. Insiders thrived, outsiders drowned. By the 1800s, the idea of a free market was an illusion. Everything was orchestrated, every boom and bust deliberate. Behind every rally was a reason. Behind every crash was a winner. It wasn't magic, it was manipulation. The rich didn't fear the market, they owned it. And from the shadows, they pulled the strings while the world kept playing. The game wasn't rigged. It was designed this way. And the longer you played, the deeper you fell. Act 3. The American twist. America didn't just adopt the stock market, it supercharged it. Wall Street wasn't built on dreams. It was built on war and debt. During the Revolutionary War, the U.S. government needed money fast, so they sold bonds, IOUs backed by hope and desperation. Speculators snapped them up, betting the new nation wouldn't collapse. And just like that, American finance was born in chaos. Wall Street's first trades weren't stocks. They were bets on the government surviving. Once it did, the market exploded. Rich men gathered under a buttonwood tree in 1792. They signed a secret agreement, no outsiders allowed. It was the start of the New York Stock Exchange, an exclusive club where rules could be made and bent. Corporate giants emerged, railroads, steel, oil, and behind them, financing machines backed by speculation. Wall Street wasn't a place, it was an idea. Profit without production. And if something stood in the way, manipulate it, rewrite it, control it. In 1907, the market crashed, people panicked, banks failed, lives shattered. But one man saved it, J.P. Morgan. Not the government, a private banker. He injected cash, calmed the panic, and walked away more powerful than ever. It was clear, Wall Street wasn't just part of the system, it was the system. Then came the Federal Reserve, supposedly to stabilize everything, but even that became another lever for those in the know. Printing money, inflating bubbles, picking winners, ignoring losers. By the 1920s, the American dream was inseparable from the stock ticker. Speculation became patriotic, investing became identity, and the crash of 1929, that wasn't an accident. That was the consequence of power left unchecked. A boom fed by lies, a bust that ruined millions. And still, the game went on. The game we're still playing. The stock market wasn't created to empower the people. It was created to harness them. What began as a way to fund voyages became a machine to fund control. Every crash, every bailout, every boom, it all traces back to that same origin. A system built on risk, but designed to shift that risk away from the powerful. Today we call it investing. The game hasn't changed, just the packaging, apps, charts, social media buzzwords like democratization and financial freedom. But behind the curtain, the game remains rigged because those who created the rules still control the board. The question isn't whether the stock market works, it's who it really works for. Every time you trade, ask yourself, are you the player or the product? The truth is, the stock market was never just about money. It was about power, psychology, and belief. A story so good billions bought in. A story repeated so often we forgot to question it. Now that you know how it began, maybe it's time to ask where it's really going. And if you found value in this story, then subscribe, like, and share it, because understanding the system is the first step to beating it.